Fitch Ratings, credit rating agency Fitch Ratings, has raised India's growth forecast for the current fiscal year FY25 to 7.2%, as against 7% projected in March. Now, Fitch cites a recovery in consumer spending, increased investment. However, they say that investment will continue to rise, but more slowly than in recent quarters. Now, what does this mean, and what does this mean as far as the RBI policy is concerned? Remember, Fitch has also said they expect RBI to cut its policy rate this year, but only once to 6.25%. So, to decode all of this, we have business economist Sanchita Mukherjee. Thank you for your time, Sanchita. Significant from Fitch Ratings. However, what is this that they're saying about investment rising but at a slower pace?
Thank you so much for having me here, Sakshi. Yes, indeed, this report comes at a welcome time. And quite rightly has said that now, because of the reforms that have happened in the past and the execution of these projects, and more so expected in the future, the investment climate will improve, albeit they have mentioned slowly, and consumer confidence will take off with more investments happening in the public and private sector, and consumer confidence will lead to more consumption, which is something that is required in today's date. However, I would take most of these reports with a pinch of salt as a business economist, because a lot of times these reports are a little lagged in their approach towards economic issues. And by that, I mean to say that if you were to notice, the investment climate, in fact, has been at its peak in January, February this year. The kind of projects which we have gotten with public spending, with trade agreements done overseas, all of that has been at a record level in January, February. Then it slowed pre-election, and post-election, post-budget, it's expected to, in fact, happen to a very, very large extent. What is required at this point in time is for the government to actually focus more on how to spur consumption, how to spur the private sector towards investments, towards the investment climate, because last 10 years there's been a heavy lifting done by the public spending, right, on infrastructure, ports, highways, everything. So private needs to now pitch in with the investment climate, which in turn would aid the consumer confidence even further.
Right. And Sanchita, when they say that, they still expect the RBI to cut its policy rate this year, but only once to 6.25%, what essentially does this mean for the consumer sitting at home, for the viewer sitting at home?
It means that we expect a very favorable monsoon, albeit that Indian economy has really been reeling with the severe heat wave that has happened all across the Gangetic Plains and down south as well. However, having said that, the prediction of normal monsoons, onset of early monsoons, is very, very optimistic, which goes on to show that the food inflation, keeping every other variable equal, should be under check. So Fitch report clearly says that the inflation would be ranging 4.5 in next couple 2 years, 4.3, 4.3. Given that every other variable is under check, RBI actually has been very, very cautious on food prices increase on inflation. So if all things being equal, all status being equal, if inflation numbers are under check, and consumption needs to be given a boost, growth needs to be given a further boost, RBI will look at cutting rates end of this year.
Right. Your projections then for the sectors that you feel we must look out for, of course, the run up to the budget as well, but the fact that the sectors that will really be crucial, given the fact that there are these monsoon projections coming in, and the fact that we have battled and we are continuing to battle an intense heat wave at large.
Yes, that's right, Sakshi. So my advice over here would not be construed as an investment advice. I'm talking generalistically on the economy. I do think that the budget would still encompass a lot of work which is yet to be done, even on the infrastructure front. For example, I don't think that any one in the Indian economy will be easy on that front, given that there were a lot of debates which were coming in the media on coalition government and all of that. Having said that, I still think that the government has actually displayed immense fiscal prudence over the last 10 years, and they will continue to do so, because macroeconomic prudence is very, very critical in today's date. We can see what is happening in China. They are overhung with tremendous debt. US, they've been printing currency overhung with a lot of debt. Japan is not growing. So things like that. So I think India is very watchful, and rightfully so, on the fiscal prudence. However, the spending that is happening on social, physical, and infrastructural development, digitization, these kind of reforms will keep happening. A lot of it has already happened. Now would be the key time to execute and show on ground the benefit that's happening. So I would be very, very optimistic in sectors which still require a lot of electrification. For example, power demand. I feel we are still very, very undercapacitized in terms of, if India was to, become tomorrow's AI factory, the kind of electricity demand that would happen, the electricity demand that's already happening in the MSME sector, electrification, power, infrastructure, healthcare. These would be the themes which one should be very optimistic on in today's date.
Right. Thank you so much for sharing your insights. And of course, we will continue to track the economy and, of course, the reform momentum at large, the implementation momentum at large. Thanks for your time.
Thank you so much for having me.